the 28th day in the month of September. September gradually getting to its end, and the end of the year is getting really close. I'm Ini John Mekwa. This is 55 minutes of current and relevant business talk, and it's right here on Business Morning on Channels Television. I'm Ini John Mekwa. We get right into it with what's going on in the global oil space. Prices jumped nearly $1 a barrel today to its highest in more than a year, as a steep drop in crude stocks in the United States added to worries of tight global supplies from OPEC Plus cuts led by Saudi Arabia. U.S. West Texas Intermediate crude futures led the charge, rising above $95 for the first time since August last year. WTI was at $94.60 a barrel, and that's up 92 cents. That's about 1%. Brent crude futures climbed 77 cents to $97.32 a barrel after hitting levels not seen since November last year. U.S. crude futures stocks fell 2.2 million barrels last week to 416.3 million barrels, according to government data, and that's far exceeding the 320,000 barrels drop analysts had expected. Crude stocks at the Cushing, Oklahoma storage hub, delivery point for U.S. crude futures, fell 943,000 barrels in a week to just under 22 million barrels, and that's the lowest since July 2022. The crude draws follow production cuts of 1.3 million barrels a day to the end of the year by Saudi Arabia and Russia of the Organization of Petroleum Exporting Countries and its allies, that's OPEC Plus. The group will be meeting on October the 4th to review markets. Well, the other side of that is that the removal of subsidy on premium motor spirit, PMS, petrol that we call it, led to increase of prices from about 156 to over 600 at this time in different parts of the country, and has left a lot of businesses turning to gas as an alternative. Well, they say it's better, it's cleaner energy. The federal government is working to speed up the adoption of compressed natural gas for buses, cars, trailers to lower transportation costs. Businesses in the commercial city of Kano, northwest Nigeria, are already resorting to gas, which is cheaper and more cost-effective for doing business. Our correspondent there, Nanchin Vincent, reports and brings some of those visuals of businesses that have turned to gas for now.
The removal of fuel subsidy is no doubt impacting businesses across the country. Business owners are looking for alternative source of energy to power their businesses as the price of petrol continues to rise. Petrol is sold in Nigeria between 615 naira per litre and 700 naira per litre, depending on your location. This development is making business owners to seek alternative source of energy to power their businesses, and here in Kano State, gas is the alternative.
From our combustion, it's taking 1 hour or 2 hours. It's taking 2 hours from our combustion. 1 kg of gas is taking 2 hours before we finish it.
Like this one now, very economic, miles past fuel. I come get what they go construct the whole carburetor. That one, the constructor, the work, but the smell of the gas, go the hear for everywhere. But this one, don't go the hear the smell.
However, experts expressed some concerns with the conversion of petrol-powered generator sets to gas.
A lot of people are going into conversion. Some are converting their generators, petrol generators, to LPG generators, to other like natural gas generators. So, but basically what the government needs to do, I think, is to kind of regulate the conversion activities, because now you find out that, even the roadside mechanic is converting, and you are dealing with these gases that mostly are flammable.
According to the latest reports by Africa Energy Chamber, AEC, Nigeria's gas production level hits 1,780 billion cubic feet in 2023. Nigeria has over 200 trillion cubic feet of natural gas reserve, the largest reserve in Africa. Some experts say the abundance of gas resources in the country will mean a lot for Nigeria in the next phase of energy transition.
You can see that we have the abundance of this natural gas. What does the government need to do? the government needs to invest more in infrastructural development to be able to produce more of these gases. We have the reserve, but we do not have the capacity to produce to meet up with the demand of the country.
Experts state that fossil fuel emission in terms of diesel, petrol is telling so much on the world, especially the impact on climate change. Hence, the recommendation for the usage of gas generators. However, they are calling for caution. From Kano Commercial City, Nancy Vincent, Channels Television News.
And in spite of that conversion, the Manufacturers Association of Nigeria is saying that no fewer than 3,567 jobs were lost in the manufacturing sector in the first half of this year. According to the report, employment generation in the manufacturing sector, it declined to 6,428 in the first half of 2023. This was about 32.8% reduction in employment generation. We have, well, at the heart of that report, the Director General of Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadri, joins us virtually now to tell us more about their findings for the first half of the year. Thank you so much for your time, Mr. Kadri, especially because we do know that you're attending one of your meetings of MAN, right? Thank you for taking time out. But so we see that more than 3,500 jobs were lost in the manufacturing sector in the first 6 months of this year. Has it been better than that before now?
Well, thank you very much for having me. We've had quite a number of challenges, and the loss in terms of employment generated in the manufacturing sector is one of the manifestations of the binding constraints that have continued to limit the performance of the sector. In the past, we have witnessed even worse situations, no doubt. But what is particularly relevant here is the fact that we had thought that we were going to, post-COVID-19, witness uninterrupted growth pathways in the manufacturing sector. So this setback in terms of employment generated in the sector means that our recovery post-COVID-19 and managing our manufacturing process in the face of the logistics dislocation by Russia-Ukraine war and all the global uncertainties. It means that we are now taking the full weight of it. So we have had it in a way worse in the past, but our growth pathways in terms of recovery has been hampered. And what you are seeing in terms of loss of employment generated is an indication.
Well, that's unfortunate there. And I see that one of the factors you highlighted is the issue of unfriendly business environment. Well, this was in the first 6 months. So knowing that this administration started, just about how many months ago, perhaps. But would you have expected there to be a change by now? We see President Tinubu is very high on interest rates, he has that tax committee and all of that. Would you say things have started changing, after the 6 months, to now?
Okay, I would say that there are indications that things will change. And that depends on how government comes out clean and very clear about the direction that is going. Most of the hardships and distortions and uncertainties and apprehensions that we are having now is because there appears to be lack of clarity as to what the end game is all about. I mean, we have seen pockets of quite progressive and much needed reforms by the administration. And I agree with you that the government has just come in. But there's need for the average investor and the operator in the private space cannot rely on hope that is not defined. So we need to be assured of one, clarity in terms of what government is doing at the expected end with timelines so that it can guide your production projections. For instance, it can guide your expectations. It can guide how you are going to work on your business strategies. I mean, to be able to succeed. So we are seeing that Mr. President has done the right things. I mean, the floating of the naira, I don't think anybody is quarreling with that. The removal of the fuel subsidy, I think, is generally accepted. In terms of making the right changes and the CBN, getting the ministers to settle down, yes, I believe that we can live with all that. But then what next? What is the end game? What is the overall objective of government? That is what will allow us to locate ourselves in the government plan. It is okay for us to have informed government about what needs to be done. And I think we've done that severally. So many other sectors have done that. But what does government want to do? Where is government taking us? I mean, what are the gains to come from, for instance, the removal of fuel subsidy, the floating of the naira rate? How are we going to guarantee adequacy of supply? And is the productive sector going to be prioritized so that we can reflate the economy and have a quick recovery? What are we going to do about inflation? I mean, the rising cost of diesel and so on and so forth. What is the end game? In terms of all those costs, that's not really the border. I mean, in terms of debt and what is government going to do so that the private sector can queue effectively behind government? And what government wants to do becomes what Nigeria wants to do. And everybody buys into it. Then you can invest your money. Then you can or hold back your money. Or you can expand production or constrain production. You can plan for increased output.
All right.
Because the manufacturing sector continues to operate just above 50% of its installed capacity. Do we increase capacity? Do we retain it? Are we to expect consumer apathy to remain, or are we going to expect a buoyancy? So I think the clarity of direction and stakeholders' engagement is very important for us to be able to determine whether good times are in the horizon or not.
All right, just help us understand as briefly as you can, please. What do you mean by this clarity? Because we've heard the president talk. We know him. Residual knowledge of him at the back of our mind tells us he's a pro-market. We saw the market react to that. He's talked about the interest rates, talked about the FX. What form of communication are you referring to? Are you saying perhaps he should sit down with the manufacturers, he should send out press statements, he should have interviews? You know, let's just put it in picture. How would you like this communication to come through?
Okay, so I think generally Mr. President has said that he's going to ensure that he promotes production. So what are those measures that will be taken to promote production? I think they have to be clearly outlined. Are you going to remove those binding constraints? For instance, the CBN has just put out this price verification portal, which is constraining manufacturing imports because they give you a price range that is obviously unrealistic and not related to what the current realities of the manufacturer is. Is government going to say that this is our policy direction? And they need to put it out to say that in promoting domestic production, we are going to do A, B, C, D. Of course, engage stakeholders in determining that. That's what we are saying. Government, for instance, is saying that the naira, government has floated the naira rate. So government needs to tell us, having floated it, this is the way I'm going to pursue the adequacy of supply. And this is the way I'm going to prioritize the productive sector so that I can reflate the economy. So the government is supposed to come out to say, okay, we have removed fuel subsidy. Everybody knows that the most important remedy for this is for you to have local production. So this is what my plans are in terms of ensuring that our refinery works. And this is what I'm doing so that everybody that is involved queues behind government. I'm just talking of adequate communication, particularly to those who play in the sector and also generally to Nigerians, so that the issues about tension, about apprehensions, about suffering can become livable, so that people will have an expected end. Those are just the thing that I'm saying. I'm saying that it should be coordinated. So now that we have a coordinating minister for the economy, I believe that's going to be a lot easier, so that he puts out a general framework for the reforms, for the expectations in the renewed hope that the president has said this is what it entails, so that every one of us can locate where we stand in that whole story.
All right, thank you so much.
I'm trying to say,
yes. Thank you so much for painting that very clear picture right there. The Director General, Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadri, for your time, and enjoy the rest of your day.
Thank you for having me.
All right, well, that's it. The Director General of Manufacturers Association. Now, next, we're going to speak to a manufacturer to get a first-hand information of how really the first half of the year was. And joining us from Kaduna, Mr. Ernest Osayame. He is the Managing Director of Twinkle Star Simplicity Limited. And good morning, Mr. Osayame, and thank you so much for your time.
Good morning. Thank you for having me.
Kindly explain to us, or just share with us your experience in the first half of this year. MAN, which is the association that covers your operations also, said that about more than 3,500 jobs were lost, and also reported of unsold goods, from that first half of the year. But share with us your experience, first-hand experience, being a manufacturer in Nigeria, the first 6 months of this year.
All right, thank you very much for having me in the studio this morning. Actually, I'm going to speak based on, because we are private sector that operates in the manufacturing industry in Nigeria, and I will need to talk to what happened between January and June. I would like to start from the real thing that affects our manufacturing industry. Between January and June, I would like to talk on power first. Power. Nigeria generated 3,400 megawatts to 4,200 megawatts. The speculations, not verified. You see, the bedrock of every economy is power to manufacture, one, distribute two, and have the confidence of consumers in order for them to, have the ability to procure what is being manufactured locally. And another thing we need to understand in this context is there's no country in the world that have monopoly of 100% manufacturing, that have 100% raw material for manufacturing. You must still depend on other countries, raw materials. So between January and June this year, because of the inflation in the Nigerian context, it has hampered, it has caused a challenge in the manufacturing industry. Could you imagine you manufacture or you produce goods and there's nobody to come and pick it up? That is number one. Number two, we need to look into is the bad road network we have in Nigeria. The bad road network. I'll just give you a scenario of what happened to us. We did some goods that we were supposed to take to Ogun State, and load them inside the truck and wheel from Kaduna to Abeokuta. If you imagine, that truck got to Abeokuta in almost 8 days. 8 days, just because of the bad roads. From Kaduna to Abuja to Lokoja and all the way, they are all characterized with bad roads. These are what is affecting us as manufacturers. The third one, and I will speak on, is the bottleneck for exports. Now, I had the privilege to be with some government parastatal and put a call to the former ZDG or SA to the president of Ease of Doing Business in Nigeria. And I spoke with her. I said, see, we're having a lot of issues when it comes to exporting our goods. I laid down a lot of, challenges that characterize all these things. But you see, what did I get? What did we get? Because we are, we have a group. What did we get at the end? Nothing. There's always a bottleneck. One, from bureaucracy when it comes to exports, bureaucracy when it comes to assessing, loans, bureaucracy when it comes to government policies. is between that January and June, we knew what we lost because of all this bureaucracy. I mean, to add to it, we have the issue of the access to facility. There's no manufacturer today that we say they have 100% facility to run their own factory. You know, now when you go to commercial bank tell you a lot of things, bring this, bring that, so many. And even when all those things are being brought, they will tell you need to start paying the next month. They will not even allow us to breathe. The next month you start paying that facility. You will not even use the money to do anything. Perhaps maybe you buy some equipment from abroad, the equipment has not arrived, you start paying both the capital and the interest the next month. They don't allow you to breathe. So how do you function in that kind of environment? How do you function? I believe in 2014, you sent a representative to come and to interview me on our proposed privacy execution line where we're supposed to set up in Osun State. Are you with me, please?
Yes, I'm with you. I'm listening to you.
Okay, so we went to Osun State. Graciously, the former Governor Arabeshola, granted us our wish, gave us land to site this PVC extrusion line for the manufacturing of tarpaulin tents, flex material, which we use, in our printing industry. But what did we get at last? Between 2014 and now, that should be about 9 years. We are unable to even site that factory. We were unable to site it because of what? Because of access to this facility. In 2014, we were supposed to use 2.6 billion to build this factory. Today, it's going to cost us over 9 billion to do that. And there was nothing. We went to Exim Bank, we went to Federal Ministry of Finance, we went everywhere just for us to have this, because it took us a lot of time, over 5 years, to do this research. Went to Dalian in China to have a meeting with the people that would manufacture the equipment. And what do we get now? The land is still there, shallow. These are just one of the things that do not encourage us as manufacturers in this country.
Mr. Asame, do you see any quick fixes? Any quick fix, to handle? I mean, imagine you saying that a delivery that was supposed to take how many days, going from Kaduna to Abeokuta spent 8 days. Imagine if it was the perishable goods. Obviously, that is going to be spoiled. So what do you see as some of those quick fixes that can be implemented?
Okay, very nice. I like that. One of the quick fixes is one. You see, the federal government of Nigeria, concentrate in the agricultural sector too much. Without processing, your agriculture or your produce, your agricultural produce is nothing. You just eat it raw, just as we are eating our oil raw. Now, the quick fix should be, let's have this robust conversation, with the government. First, let the financial institution come clean to us. Let them come clean to us. Let them put in some kind of facility, some kind of I don't know how I'm going to put it down, some kind of measures that would not put a lot of pressure on the manufacturers when they want to access loan. Number two, let the federal government fix these rules. Let them give us lights. Let them give us power. Let them give us power. If every state can generate even 300 megawatts, 300 or 500 megawatts, every state. Another thing is, you see, when they generate it, you see that we have more power. And another thing is this, and I want to say, it's a piece of advice anyway, to whosoever that is in government. See, you see this, our 6 geopolitical zone that they are saying, please, if they can change it to 6 geo-economic zone, that will be fine. Every zone have their own potentials. I'm in the north. I know the potentials that is so enormous in the north when it comes to even raw material. We've done a lot of research. If it's let there be power, let there be access to facility without us, the next month you are trying to pay for facility that you have not used. Let there be good roads. Thank God for the Minister of Works that just come and I think he's doing. He has started well. So let all those things just be put in place, and you see that we consume what we produce. That is just what we want as private sector.
All right, Mr. Ernest Osayame Asemota, thank you so much. Managing Director, Twinkle Star Simplicity Limited. And we do have a Minister of Power also, so we do hope that he's watching with his team and we'll see some action. Thank you for your time and enjoy the rest of your day.
Thank you. Thank you.
Let's take a break now. When we come back, it'll be commodities time. Welcome back. It's commodities time now on Business Morning, and we're doing that with Dr. Adesola Somoni, is a senior analyst with Financial Derivatives Company, joins us virtually from Reading in the United Kingdom. Thank you so much for your time this morning, Dr. Adesola. Well, we'll start with Brent. It's up this morning. We saw prices surging, and we know it has to do with drawdown in United States inventories and some of those stockpiles. Could you give us the details of this?
Thank you for that question, Ina. Thank you for having me on the show today. So let's start by saying that the global oil market is currently a tight market, and that's mainly due to large production cuts by OPEC Plus, in particular Saudi Arabia and Russia. We know Saudi Arabia cut production by more than their fair share, by around 1 million barrels a day, and they're expected to hold that up until the end of the year. Russia also cut production by around 300,000 barrels a day. In addition to that, they banned the exports of gasoline and diesel, which further tightened the market. And one of the direct impacts of this is a drawdown in crude stock inventories in the United States. Data from the Energy Information Administration showed that there was a larger than expected drawdown in U.S. crude stock inventories by around 2.2 million barrels against forecasts for a moderate drawdown of around 300,000 barrels. The week before also, we saw the large drawdowns also of about 2.1 million barrels. In addition to all of this, we are seeing in China, globally, we are seeing a stronger demand for oil globally. Also in China, despite the lackluster economic performance in China, we also seen some oil demand coming out of China. The expectations that towards the end of the year, the market will be undersupplied by around 1.8 million barrels a day, which suggests that oil prices are likely to remain elevated in the near to medium term.
And then the outlook for oil remains bullish. We saw JP Morgan saying that it's going to hit $150. That'll be good news for countries like Nigeria.
Indeed, JP Morgan are notoriously bullish on commodities, particularly oil. So it's not surprising that they see oil reach $150 next year. Also, the forecast for average oil price for this year has now been increased to around $91 per barrel against $81 per barrel that it was before. And obviously, higher oil prices is good news for oil exporters like Saudi Arabia, Russia, Nigeria. But on the other hand, it has big implications for oil importers. Because as oil prices in the global market continue to trend upwards, it also then translates into energy prices in the domestic economies for oil importers, which also has implications for inflation. And it's important to note that, even though globally inflation is trending downwards, it's not really where we would like it to be. And, the central banks globally are keeping a keen eye on inflation. And if, the inflation comes in stronger than expected, then we might see this tightening cycle stay on longer.
And then talking about gas, we see that Europe is increasing its demand. I thought their reserve was about 90% full about a month ago.
Indeed. So for the European gas market, there are a couple of things that you need to know. Number one is they're trying to win off Russian gas. We all know that. Number two, like you mentioned, is that their storage is actually around 94% full. But that notwithstanding, Europe is still trying to, secure import sources just to prevent a potential energy crisis. I mean, last year we were able to prevent that due to a warmer than expected winter, and that is why, because Europe is still trying to secure import sources. That is why any threat, whether it is a perceived or realized threat to global oil supplies, it makes the European gas market quite nervous. For example, over the past couple of weeks, we saw in Australia threats of a strike in some of the gas exporting ports, and that really shook natural gas prices in Europe. Thankfully, last week the labor dispute was resolved, so that threat did not materialize. Also, in the United States, which is one of the biggest supplier of gas to Europe, there was some issues in some export terminals, in some of the largest export terminals in the US, which also threatened natural gas prices in Europe. But generally, I think that the stock is solid, is robust, and I think whatever volatility we see in prices would eventually convert towards a lower steady state.
And then cocoa, the demand is weakening. Do we know why?
So essentially, what is happening in cocoa markets is kind of like a correction. There are two main factors driving cocoa prices at the moment. Number one is technical factors. Just yesterday we saw bad performance, or we saw bad performance in the S&P 500 market, which brought about some risk-averse sentiments in the commodities market, and that led to sell-offs in cocoa futures. We're also seeing a stronger US dollar. The US dollar has risen to, I think, a 9-month high, which is making reducing the demand for dollar-denominated commodities like cocoa. However, when you look at fundamentally, the stock of cocoa is actually declining. If you look at production and exports from the largest producers in West Africa, which account for around 45% of total production, you see that diseases such as black pod diseases, swollen shoot disease, all of these are constraining production and output in Ivory Coast, in Ghana, in Nigeria, and that has happened for a while. So prices in cocoa market has been elevated for a while, and it's kind of causing some form of demand correction, and that is why we are seeing some form of lackluster demand for cocoa. But when you look at the stock of cocoa globally, it's quite low because of these production challenges coming out of the biggest producers in West Africa.
All right, and looking inwards now, our domestic, what's happening to our domestic crops and commodities?
For our domestic commodities market, let's divide the commodities into two: the local commodities and the imported commodities. For the imported commodities, due to the FX pressures, we are seeing prices trend upwards. If you look at the price of flour, for example, it's trending. It's up around 8.6% to around 38,000 naira. The price of rice is also a bag of rice, a 50 kg bag of rice is also up 9% to around 60,000 naira. But when you look at the commodities that are produced domestically, also that coincides with the harvest season. We are seeing more supply for some of these commodities, that prices are trending downwards. For example, if you look at the price of tomatoes, it's down around 38% to 40,000. Now that is a 50 kg basket of tomatoes. If you look at the price of peppers, they're also down around 12.5% month on month to around 35,000 naira. And if you look at the price of a basket of onions, a 50 kg basket of onions, they're also down around 18% to 45,000 naira, mainly due to the harvest season, which usually increases the supply of these commodities.
Yeah, I do wish we could, capture all of that so that it wouldn't be after the harvest season, then prices, surge again. If we have storage and preservation facilities, that would sustain these things in very good condition. Well, thank you so much for sharing your perspective with us this morning, Dr. Adesola Simoni, Senior Analyst, Financial Derivatives Company for your time this morning.
Thank you for having me.
Let's take a breather. We'll be back for more markets. It's back to the markets now, and Will Ibon comes in with good or bad news. Well,
good morning,
Good morning,
You
Will.
know, we don't have any news yet. The market was closed
yeah, the market was closed yesterday.
So, we do know that the market is definitely going to be in the green today, yes. So, well, I'm thinking investors are going
confidence.
to, I'm just trying to stay positive, being optimistic about the market.
After the celebrations of yesterday,
yes, you do know that they reflected.
You don't think they want to line their pocket for spending?
Oh, well, they had a reflective, celebration. Yes, so they were sober. So, in fact, they probably thought about their investment, possibilities in their portfolios. They must have rebalanced and thought about how to, position themselves. So, I'm thinking bargain hunting. Okay. So
we're watching.
We're watching to see. But we did see that, the markets on Tuesday for the bond markets, we're just going to review that and see how it panned out for that space. It was trading on a calm note on Tuesday. Average yield closed flat at 14.5%. We saw across the benchmark curve, the average yield was unchanged at the short and the long ends, but it rose slightly at the mid segments. But we're seeing some profit taking in, the 20, some papers there, but we're going to have our analyst, as Vincent Oshoma is the head capital market, is also the chief dealer at Interstate Securities Limited. Good morning, Vincent. It's good to have you on the program.
Good morning.
So we're saying that dip in that report that came out saying that there was about a 99% dip in the listings on the NGX. That's the FG bond listings on the NGX for the first 8 months of this year. Can you tell us more about that? Why do we see this decline? Is it that the government are borrowing less?
In terms of thank you very much. In terms of government borrowing, the debt management office usually release their calendar, and they have been following that calendar. So in terms of government borrowing, we have not really seen a major reduction in government borrowings. I think it has to do with the listing, because these bonds, they have to be listed. And you know that for the major bonds outside the savings bonds, which are issued afresh, what the government normally does is that the government reopens existing bonds and they add to the outstanding issues for those existing bonds. Most of those bonds that have been reopened, they have not been listed. I think that can account for the reduction in number of listed bonds that you saw for that period. Or in terms of borrowing, because the line with a calendar that is released every quarterly, has been following that calendar. But one of the things we have seen in the calendar is the fact that we have seen a lot of subscription for the government. There have been a reduction in terms of allotment when you have a lot of subscriptions in the market.
So we do know that some people have raised the fears that the borrowing could be as a fact that the present government is not able to service the debt with the currency, with the hard currency that we have now. So they're seeing this, high debt, high debt servicing. Is this reason why the government is slowing down on borrowing, or are we expecting more borrowings in the future based on the calendar that they've already released?
Yeah, one thing that for this year we had a transition in government, and one of the things that have happened this year is the fact that we had a budget deficit of about 11 trillion, and the government was supposed to borrow about 9 trillion to meet that deficit. But one of the things we have seen is that there was a removal of subsidy, which led to an increase in government revenue, and also with high inflation, current high inflation, the government is also looking at the rate at which is borrowing. So they will be looking at that. And I think with the increased revenue, they'll also be looking at reducing their borrowing. But I don't think that has really played in. But the fact that government is watching the rate at which is borrowing because the inflation level is quite high, I think those are the issues that the government will consider.
There's also fears that the current borrowings is going to probably crowd out the real, productive real sector. Is this something we should be worried about at this moment?
Yeah, it's a thing of great concern for both the government and the market, because when you look at the current borrowing levels, by the latest results said that Nigerian debt level is about 87 trillion. Initially, it was projected to be about 77 trillion. But as a result of the devaluation, that led to increases both the foreign as well for the foreign debt devaluation, the foreign debt component of the debt. So, and that has made the government to exceed its borrowing targets, because government target was usually has been placed at 40% of GDP. Currently, is has exceeded that because the level is beyond expectation, beyond projection. So, I think it's one thing the current government is looking at, and also, if it goes into continue borrowing, it will be borrowing at a higher rate. I think what the government will be looking at is looking at other sources of raising income to finance its budget, which is one thing even the IMF has mentioned, that the government needs to look for alternative sources of funding its budget, and also look at bringing in private sector in some of its projects. I think that's where, for the current government, I think it's something that they will pursue, like we saw when we have seen in the Lagos State. I think they'll be looking at partnering with the private sector for most of this project, rather than just going on borrowing spree like we saw in the previous administration. I think that's something that we have to watch very closely.
So more private sector partnerships, looking at private debt borrowings or private debt to raise capital, rather than going outside of the country to get a lot of loans. Thank you so much, Vincent Oshoma, Head Capital Markets, Interstate Securities Limited, for joining us on Business Incorporated.
Thanks for having me.
So we did see the markets for the NASD, they closed on Tuesday down 2 days in a row now. The index is still at 810.87 points. Market cap, however, it's looking good, 1.15 trillion naira. So anyway, we're just hoping that the market reverses the losses. I said earlier, I'm hoping for a positive close, both for the NASD and the NGX. Fingers crossed, fingers crossed. Yes,
exactly.
Fingers crossed.
All right, Will.
They don't have a glass ball here, not looking
No, we just say what we hope for.
We hope to have.
Exactly. We'll see at 1:30, Will. All right, now let's head to London, where Juliana is standing by. While Juliana is in London, the UK Cabinet Minister, Mr. Grant Shapps, is in Kiev. I wonder, is it more aid coming the way of Ukraine from the UK when the UK has its plates full? Well, Juliana tells us about this. Hi, Juliana. Good morning.
Good morning, Innie. You're absolutely right. This morning, Grant Shapps, the Defence Secretary, he has been meeting with the Ukrainian President Volodymyr Zelensky, as well as other senior officials from the Ukrainian defence military. Now, this wasn't a visit that was pre-announced. I presume this is because of the security reasons. And it is the first since Grant Shapps took over from Ben Wallace just a couple of weeks ago. Before that, he held other senior cabinet meetings. The announcement was made via X, formerly known as Twitter, because the Ukrainian president did put up a picture of him and the Defence Secretary, Grant Shapps. And we know that Britain has been a staunch ally of Ukraine ever since the war broke out in February 2022. We supported the Ukrainian government with, as you quite rightly said, millions of pounds worth of aid. And, of course, which is one of the reasons why Grant Shapps is there, defence equipment. And I believe that's exactly what Volodymyr Zelensky would want. He wants more than that. That was what he said to world leaders in New York when he gave his first live address to the United Nations General Assembly. But I think it's going to be very difficult for him going forward to try and secure that aid. We know that he did sack several senior defence ministry individuals just a couple of weeks ago because of links to corruption and fraud allegations. And Zelensky himself is a man under pressure. There are some suggestions going around British high-level discourse that perhaps he could even be on his way out. But for Grant Shapps, this, of course, is a very important meeting in terms of what's happening geopolitically. The war in Europe certainly affects the UK. And I think him being shoulder to shoulder with Volodymyr Zelensky does show that Britain is still standing by them.
All right, symbolic meeting we see there. And then there's reforms around life insurers and investments in the UK economy. How much of this do we know at this time?
Well, this is a very, very technical story between the Bank of England and the financial services that they do with the Prudential Regulation Authority. That's how the Bank of England manages to regulate what financial firms are doing, whether or not this is banks or insurers. And we know that the UK economy is teetering on a recession. So whatever they can do to bolster investment is absolutely fundamental. So that's why the PRA have announced that they have begun this morning a series of what is likely to be a very lengthy consultation with financial insurers, just to make sure that those who have opted in on life insurance are able to invest in government products without fear or hassle. There is a lot of bureaucracy that goes on when it comes to insuring and where your money can go and whether or not you tick all of the boxes. So I think what this consultation between the PRA and the BOA is trying to do is trying to knock down, or should we say rip up, cut through some of that red tape to ensure that those who are life insurers are able to invest in government products very seamlessly and swiftly.
Yeah, well, every country needs innovations when it comes to investments at this time. It's for the whole world. Thank you so much, Juliana. I will talk to you at 1:30.
Talk to you then.
Now let's head to the crypto space now and see the sentiment around there at this time. If we could have the board right there we see it's back to fear. Investors are afraid. Well, I guess Ladi would normally ask what are investors are afraid of, and I would say they're afraid of losing their money. Nobody wants to lose your hard-earned money. In fact, you know, these investments are supposed to help you grow your money, and if they make you lose your money, then of course you'll be afraid. And so it seems it's a common sentiment in many markets at this time. We have fear for the crypto market at 46. Let's look at the numbers there. Bitcoin regained a bit, 0.59% at 26,403. Ethereum also regained 1.14%, and BNB as well as Cardano, XRP, however, in the negative. Especially we have our eyes on XRP. It's down 0.52%. Let's see the top gainers for this morning. There you have them. We have the Bitcoin CH there, right there, up 9%. MKR also up. Lunsi and Pepe. Pepe is also up right there. So looking interesting for the top gainers there. Some kind of numbers there to give encouragement. However, what we have in the news this morning when it comes to Bitcoin is that U.S. Secretary Chair, his testimony yesterday. Obviously, a lot of crypto investors and stakeholders have been following that. Let's find out what Michael knows about this. I mean, he's right there in the United States. Hi, Michael. Good morning.
Good morning, Ini.
Yeah, so tell us, what are some of the highlights of that meeting or that testimony at the Congress regarding crypto regulation? Anything new?
No, Ini, it's the same song and dance that we've been doing for years now since Gensler was SEC chair. We have him go to Capitol Hill. We have congressmen grill him, ask him some tough questions, but he goes on doing the same thing, basically litigating and regulating the entire industry by enforcement. Some senators, include Senator McHenry, Congressman McHenry threatened to have to subpoena him. He would be the first ever SEC chairman to be subpoenaed. Because it's just getting, frankly, ridiculous. At this point now, before the meeting at Capitol Hill, he rejected 2 more Bitcoin applications for the ETF. And multiple times they tried to ask questions like, is Bitcoin a security? To which he didn't give a straight answer to. He said, yes, it's not a security under the Howey test. However, for his life, he couldn't say if it was a commodity or not, because if he said that, that would make Bitcoin fall under the CFTC, the Commodities Futures Trading Commission. It would make Bitcoin fall under their purview. So he was quite careful not to mince words and to do everything to make the regulations stay on his side. But regulators, frankly, in a bipartisan effort, had had enough. And they basically wanted to continue to grill him and tell him that he does not have carte blanche in regulating digital assets. It's most likely before the end of this year that the House is going to pass some kind of either stablecoin or digital asset legislation. I feel very confident that they're going to push something through, so he can keep quote unquote misbehaving. But I think moving forward, I think Congress is going to take it in their stride to actually give us a framework. It might not be the SEC that gives us that framework.
All right, so Michael, just very briefly now, what is this uncertainty doing to the markets at this time?
It just makes it hard for everyone. You have MoneyGram yesterday coming out saying that they're going to create a non-custodial wallet. Basically, what that is it's just like having a generic wallet on your phone that's not custodied by an institution. So they're hoping that, if I send Obin on its 10 USDC or USDT, he can clear that through MoneyGram's in-house non-custodial wallet and exchange that for US dollars and get that in a Naira quite seamlessly. But the problem is when you have Gary Gensler basically not allowing crypto innovation to thrive, you have projects like that MoneyGram project basically have unanswered questions about how are we going to regulate it? How are we going to KYC people? Are these things that we're going to let people trade securities? Do we need to get an ATS license? It basically makes the innovation for crypto slower.
Yeah.
It stifles innovation is the main concern.
So we look forward to, concluding this conversation by the end of this year. So we know the stance of crypto and Bitcoin, and then we can move forward. But thank you so much for sharing your time with us, Michael Naji from New York, New York.
Thank you, Lily. Bye now.
So that's where we also draw the curtain on the program today. Thank you so much for being a part of Business Morning. Hope the 55 minutes was worth your time. If not, we'll make it better tomorrow. You just have to join us again. But before then, Will Ibong will be back at 1:30 to give you an update from the world of business. I'm Ini John Mekwa. Enjoy the rest of your day.